It's a pleasure to have you once again on the edition of The Link this week. I hope you agree with us that we keep our promise to give information that you can use and opportunities. Tonight we continue with the information. As you remember, for those who did not miss the edition last week, we talked about why you should pay back once you have borrowed, because it impacts on your reputation for the foreseeable future. And tonight we continue on a topic along those lines. It's not uncommon nowadays to find that many of you people who go to banks, your clients, your customers, you end up disagreeing with the financial institution and end up going to court. Some of you go to Bank of Uganda and then it becomes acrimonious. There's a lot of friction. And yet sometimes the banks have actually helped you grow your business, but at some point you fall out. Tonight we want to understand, is it possible to keep this relationship harmonious as best as possible? And we want to understand also, how do we get there? And we have somebody fully qualified to tell us about this. She's a lawyer, and she's also the company secretary and head of legal for KCB Bank, Mrs. Judy Wambaire. Judy, welcome.
Thank you, Samuel.
We are going to talk about things in your realm, and we already say this is a classroom, so we are ready to learn. First question: what are some of the commonest areas in which me, the customer, I am likely to have friction or disagreement with the bank? And how do we get to the point of we were happy and now we are disagreeing?
Yes. Thank you, Samuel. And maybe before I start,
yes.
These disagreements usually, in my opinion,
yes.
What I've seen, they arise from non-alignment. Between the bank and the customer.
You're not on the same page. You're
not on the same page, yeah? So the customer has certain expectations, the bank has certain expectations,
okay.
And this is not aligned. Eventually you'll get to a place where you're all fighting. Okay. And definitely in the legal space, you fight all the way to the highest court of this land, that is the Supreme Court. Yeah. But like I've always said, most of these issues, most of them, if not all, can be addressed between the bank and the customer. You don't need to go to a third party for the third party to tell you what the two of you could have told yourself in a room somewhere. So in my years of experience, I've seen that, especially in the bank and as concerning our customers, the areas where we've had a lot of friction, one, I'm sure Samuel, you also had one, and you could be very honest with us, unauthorized disputed transactions, where you have money
Judy, what
in your
do you mean, unauthorized disputed transactions?
So, Samuel, this is where you take your money to the bank.
Yes.
And then after a month or so, you go back, you want to withdraw this money, and you find that the balance is not what you expected.
Even me, I faced that.
I have seen. You must have seen or faced that. So this definitely is expected, will cause a lot of pressure, will cause a lot of friction with the customer. And it is even worse where the bank has done its investigations and it's saying, no, wait, Samuel, but we can tell that this transaction was done by you.
By me.
Or at least it was done using your credentials. Because especially now in the era of digital, where a customer doesn't have to come physically in the branch, you're able to transact virtually. I mean, anywhere in the world. You can transact, you can pull money off your account, you can put money in your account. Using your phone even. Using your phone. So when you come and say that I did not transact, but from the credentials, we see that you transacted. This is your PIN, which is private to you. This is your ATM, where you should have your private PIN as well. So definitely we'll also be telling you, wait a minute, we don't trust what you're saying. We think there's an issue here that needs to be resolved. So one, that one is obvious. It's expected that there will be disagreement.
My money has disappeared.
Your money has disappeared. Another area I have seen a lot of dispute is on fees and charges. Fees and charges, where a customer again is complaining that there are hidden charges or charges that they were not made aware of. All of a sudden, new charges have been introduced.
And my balance goes down now.
obviously your balance has also gone down. So this is not a very happy customer to face, you can imagine. They will be coming to you. They are, of course, you know, and I mean, you can't blame them. This is monies that have left their account. So again here, what the bank should ask itself is, what has led us here? If a customer is saying these were hidden charges or these were charges they were not made aware, are we selling products and withholding certain information from our customers? Are we just in a rush to sell a product? And because we know that there are certain charges that might come, we won't disclose at that point so that we can close a sale. So it calls for banks to run business in a very fair manner, in a clear manner, and in a very transparent manner, where a customer understands what is it that I'm getting into from the word go.
How about Judy? But no, okay, the bank, I understand the bank has got to do that and I agree. How about me, the customer? So they give me and I'm like, okay, let me just go.
Yes, Samuel, thank you. And that actually happens a lot. A customer has probably goods they want to clear somewhere, or they have a pressure, some pressures of life. Tax money to see. They want money now. Yes. They come, they are given a pack of documents or even one page. They don't want to read. They're asking, tell me, show me where should I sign? So that really has led customers to, you know, to regret it later, because you will find that in that print, this information was availed to them. It was there. Had they asked, had they queried, they would have gotten this information. However, we also know of certain practices that really are not proper. And where I'm sure banks have tried to, you know, to walk away from that kind of practice, where probably sometimes customers would be given information in fonts that they cannot read. You hide information in very small print somewhere at the corner of a document, or in a 70-page document, you're giving someone to, you know, to read and tell them that the information was there. Or you have a customer who cannot read and write, and they're in front of you, and they want to do banking with you. So what do you do? So as a bank, you're mandated to explain to this customer in a language that they understand, what is it that they're about to get into? What are the charges that will accrue to such a product? What are the fees that they're supposed to pay? So really, it comes back to both parties. Again, the bank, be very fair in your communication, be very clear. You know, communication on fees and charges shouldn't be scientific. It should be very plain that a customer can understand. And then, of course, be consistent. The other thing I've also seen around fees and charges is where fees are just being changed rapidly. I call it changing goalposts all the time. Changing goalposts. So you find a situation where I opened up an account, and then I was told these are my fees and charges. 1 year down the road, the fees have, you know, totally changed. And the customer is saying, well, I might not mind the change, but I ought to have been informed. So, and this really has been driven, and I know banks have also taken it up. It's in the consumer protection guidelines where you are expected to inform customers and give them notice beforehand, before you even implement this. So Judy, what you are doing actually, if I'm a listener, you are reminding me of my rights. Absolutely, yes. What Judy, you are saying banks should do, I'm also being told, maybe you should tell your banks to tell you about charges. For instance, charges. Yes, I have experienced one in my many years with the banks. I have experienced that thing of they tell you are charging maybe 10K per whatever, and then you find that you don't understand other charges because you keep track. Some of us keep track. You say, I did 10 transactions. That is, let me say, 100,000. But you find it's 150, and you ask and they say charges. Great. Absolutely. And you're right. It's not a one-way thing. It's not just for the banks. The banks must do their part. But you, the customer, must also do your part. So don't be this customer, Samuel, regardless of how much money has come to your account, who never checks the statement. Remember, when you open your bank account,
Yeah.
they will ask you, do you want to receive your bank statement monthly? Do
I
you
remember
want
those
it
questions.
via email? Do you want... So this statement is coming to you. Read, understand what is happening to my account.
Yeah.
Number two, we have customers who are frequently changing their contact address. You come today,
that's an issue, eh?
Yes, it is. So if you open an account and give me your mobile number and your email address,
Yes.
these contact details are very important because in case of any change, we are required to communicate to you using this. So when we come back and the telephone number is not working, the email address is not working, how are we able to get to you?
That's a very important point you've just said.
Very
there.
important. Please update your contact details because it's the only way your bank will be able to communicate to you in an effective manner. Of course, sometimes you also communicate through our website, through the national print, but if we have your personal details, it would help very much for us to be able to communicate to you in an effective manner.
We're going for a break, Judy. We're coming back. You said that if you take off some money, and you call it unauthorized transactions. Can you really go to court for that one? We're going to see that when we come for the break. We're going for a short break. We're going to come back. Please stay with us. We're discussing more of the issues that handling them should not let you go to court between you and the bank. We'll come back after the break. Welcome back from the break, and we were discussing, in case you have just joined us, we are discussing areas in which you are most likely going to end up in court with your bank, and how do we not end up in court and just the bank support you, you support them, you all win-win. That's what we were here to make sure of. And we have Mrs. Judy Wambaire, Company Secretary and Head of Legal KCB. She's in charge of legal staff in KCB Bank, and she's here to teach us about how to avoid conflict. So Judy, before we went to the break, okay, some money has disappeared from my account, and I'm telling the bank is saying, for us, we don't know. Do people go to court for those things?
Oh yes, yes they do, yes they do.
Yeah.
And like I told you, they just don't go and stop at the court of first instance.
That must be big money.
They will go up to the last court. You see, what is big is subjective, really. What is big is subjective. To a customer, 5 million could be big, and it could be, even a billion. So it comes down to the customer. What do they deem to be big? And I can assure you, I've seen matters in court for what you would consider not to be big and what actually you consider to be big. Yeah. So yes, these disputes, they end up in court. And the unfortunate bit is that at the end of the day, you realize that definitely there is a party there, either the customer or the bank, that was in breach of either their duties and obligations to the other party.
Okay.
Yes.
Tell me something about collateral. I know it's a tricky area. Collateral, and I am borrowing and I put collateral. Is it an issue to get concerned if I am borrowing and putting collateral? Is it something I should get concerned as a customer with the bank, and it may end us up in court? What's your experience?
Thank you. So collateral, I presume you're speaking about security.
Okay.
Security that you offer to the bank when you come and get a facility, a credit facility. Yeah. And usually the bank will take your landed property as security for that facility. So yes, it is actually one of the very contentious areas that again we found ourselves going to court over and over and over again. Yeah. And usually here is because from what I see, the perception from the customer is that the bank is unfair or the process was premature. There was no need for you to come and sell my property. Okay. There was no need for you to, to call, we call it foreclosure, to foreclose, to start the entire process. Again, when you listen to the customer, there are some things that you feel, well, they're justified, but there's also a bit of misconception. Yes, because you came and borrowed the money, you gave your security, your land as security to the bank. If there is a default, certain things must happen. Of course, unless there's an agreement again between the bank and the customer. So in Uganda, the law is very clear.
Yes.
There is no gray areas around how do banks, start that process and finalize and go up to the end. It's very clear in the mortgage laws, it's provided for. But I feel that where customers always have a concern is, one, they feel probably the notices that they should have been given were not given, because there's time frame within which the bank must exercise this duty, this right. Then number two, was it a fair process? And when I say a fair process, is the customer complaining that, look, I have no problem you selling my property, but I feel that you undersold my property. Had you sold my property for the right value, probably you would have been able to recover your loan, your outstanding loan,
and give me the balance.
And give me the balance. So again, it comes back to how fair is this process? The bank, what are you doing to ensure that even as you foreclose, which is a right that you do have, again, you're taking care of the customer's concerns. And if you do not, you will lock horns, you will go to court, and you'll find that you, the bank, you did not foreclose, and the customer is not able to enjoy the property, and therefore you're in court for a very elongated period of time.
And a lot of money is lost.
And a lot of money is lost for something, again, that could have been addressed between the customer and the bank.
Let me chip in there, Judy. Then on that question, and you see it in the papers and in the media a lot, that foreclosure question. From where I see it, bank is made of human beings, and the customer is a human being. To what extent does a human being versus process? And is there, so that we don't have a misconception of saying, but they should have been reasonable. Yet they're a business. So give us a picture there. Banks is by human beings. Managers, Judy there, the legal, and then me, I'm also a human being. Where does all this human being feelings and process end? I know it's a sort of difficult question, I guess, but give us a picture from where you see it.
Especially in the foreclosure process. Well, and it's an interesting question because, one, there's actually the law. And then there's the process. There's the law, and then there's the process. And of course, they're the human beings. But for these two things to work, of course, they're being enforced and implemented by human beings. So, in my opinion, all this that I've spoken about can really be avoided. And we've had instances even where the bank is within its rights to sell a property. A customer approaches the bank and we're able to enter into an arrangement where we do not sell the property and probably give this person more time to pay
that's the
loan.
Human being
the human being. And it should also be remembered, and I'll speak for the bank I work for, KCB. We are not in the business of selling properties. We totally are not. We are in the business of enabling, lending money to the economy to enable, our businesses to thrive. So even us, when we get to that step that we have to sell, it's a last resort, step. We are doing it because we're on the wall. And remember, the monies that we are lending out, these are depositors' funds. They are not our funds. It's a business that we are running. Again, this is a shareholder. We are shareholders somewhere looking to get value from the business. So we cannot conduct ourselves in a way that we are not discharging the duty that has been imputed upon us as the managers of these banks. So what is important, coming back to the foreclosure process, what is important is for these human beings, both the bank, which has human beings, the managers, and the borrower, to understand that one, there's a legal framework. And this, again, this is a business that is being run. However, how can we work out a 50-50 arrangement?
Win-win.
A win-win arrangement that helps everyone. unlocks us, because if we lock horns and we go to, you know, a court process, ultimately there will be a winner.
Absolutely.
But again, with court, really no one is the true winner. You get out of it limping somehow.
Okay.
So it is engaging the banks, speaking to these managers and understanding how can we either restructure or, you know, offer probably alternative security. Sometimes we've also allowed for that. But I think my takeaway here, what I would want, you know, the members of the public to know is that the banks are not really in the business of selling these properties.
They're almost forced there.
We are almost forced there.
And Judy, it seems to me, and I've seen it in some cases, the issue of relationships. As a customer, the relationship I have with my bankers sometimes could enable the relationship not break the law, but give me some breathing space. Is that correct?
Yes.
If I am acrimonious, if I don't communicate those things you have said, my address has changed, I am tricky.
Yes.
The bank also sets back. Is that correct? I see it sometimes.
100%, Samuel. You're right. Because if, for example, we are going through the process of foreclosure and all you're so interested in is also running to court to try and come up with a suit that, you know, really won't stand the test of time because you just want to block the sale, then the message you're sending to the bank is you're not interested in settling this dispute. Because already there's a dispute. You're going to war from the beginning. Yeah, there's a dispute. We've disagreed. Yes. You owe us money or you owe the bank money, and you're saying probably, yes, I owe, or maybe it's because of the interest. There are usually some, you know, some defenses in there. But I think what is important for a customer is have a relationship, like you have said. Engage. These are human beings. Absolutely. Engage them. Engage them. Come up with viable plans. Don't just come up also with something that you know it won't work. You know, I have come, I need for us to restructure this loan, I'm believing something will happen. That won't work for a bank. You need to come with feasible plans. What is it that you're planning to do? How is it that you plan to get out of this hole? I can assure you these are human beings, and you know we're always willing to listen and work out.
We want to talk about a question on misconceptions, but because of time, just one I will say it because of time. When you go to the bank, remember that the bank is a business. They have shareholders and everything, and Judy has hinted on it. Please don't behave like they have money to just give one loose. That's a good attitude to approach, even as you are doing your own business. We hope we added value to you tonight, and I know I used to think all this time is enough, but see, I'll bring back Judy perhaps, and then we discuss more of these issues that concern you with your bankers so that you don't end up in court, because normally it's not very useful. That was the link. Thank you for joining us tonight.